This is the third quarter update for the Amplify Seymour Cannabis ETF, symbol CNBS. We're speaking with Tim Seymour. Tim, let's jump right in. What has your attention in the cannabis space today?
Well, to recap the third quarter, it was an extraordinary quarter in terms of the macro headlines that, unfortunately, tend to dominate this industry. I say that because on some level, it truly is about picking stocks and picking the companies that we think are giving investors the exposure to the cannabis industry and all that encompasses. And it's vertically integrated companies, but it's also those that are involved in the cannabis ecosystem and the ancillary and the e-commerce. But the bottom line here is this is a sector that is beholden to the macro. And the macro in the third quarter was extraordinary, even by cannabis measures. And to quickly recap that, in the end of August, we had headlines coming out of the Health and Human Services Department of the government where they basically said that the FDA had come to them with a findings that cannabis as a drug should be rescheduled from Schedule 1, which is in line with heroin and LSD, to Schedule 3, it both implying that there is not only medicinal value and benefit, but there is less risk, there's zero risk from abuse, and that it implies that cannabis is not necessarily an addictive drug. So those headlines are game changers for the industry because of the Schedule 1 status, is taxed by the IRS and by the Treasury at a level that makes it almost impossible for the industry to be profitable. So the free cash flow from operations, when you then apply tax rates that again are punitive, mean that cannabis companies, even the most successful ones, have had trouble being as profitable as they have, even though a couple of them have proven that they can be profitable in this environment. It's a massive headline. It's one that also tends to imply that those companies that are already in the industry and have already proven to be the best operators and are the biggest players, and they've undergone 6 or 7 years of crazy cycles, are not necessarily suddenly going to see a federal legalization. That means all the biggest CPG companies and spirits companies and tobacco companies come in and eat their lunch. It actually is the best of both worlds. It means that suddenly, if you added a little bit more banking and capital markets access, but along with this tax improvement, but you kept everybody else out, it would change the valuations of these companies dramatically. Along with those headlines on rescheduling were comments and actually some progress within the Senate Banking Committee about finally some banking legislation that might allow cannabis companies to be properly banked, but to get the exchange listings, get some of the dynamics that we also think would be a major re-rating event. So, and there was some progress, and there's a lot to talk about because you're going to ask me about the fourth quarter because that's what we do here. But I'll just say that the third quarter recap is one where some of the most important macro, the wish list, what would be under the tree for Santa Claus, headlines addressing the two biggest needs were a big deal. One of them, I think, doesn't require the insanity or doesn't require Congress and its insanity to necessarily follow through. This is arguably the rescheduling dynamic is one that could be handled within the Biden administration, and that's why it was such big news.
Yeah, Tim, that seems like massive news when it comes to rescheduling. From a state level, have there been any legislative updates of note?
Look, the progress state by state and a adult market in Ohio and getting Maryland out of the gates and producing even some progress in New York that opening up retail dispensaries to a much broader group of people and allowing a little bit more progress in terms of the rollout of one of the most important states in cannabis. Incrementally, what I like to say is that the slow, steady march state by state of cannabis is some of the great progress in the sector that if you'd asked me 5 years ago, did I think we were going to be in north of 75% of the population in the country lives in a place where cannabis is legal in some form, and much of that is adult. State by state, the news is great. State by state, by the way, a number of the states, including New Jersey, New York, Connecticut, have actually waived the state taxes, and essentially they have reclassified from a tax perspective. So 280E on a state level is something that the states are giving relief. They believe that the cannabis companies should be taxed differently on the federal level, but they're doing it on the state level. So that's helping, even though the lion's share of the tax burden is federal. So really exciting move on the states, slow development. A couple of the states that continue to be kind of the bright spots. New Jersey continues to be one of the most profitable states for, I think, those operators that are there, because pricing has remained so robust, because the market still is somewhat limited. Then there are states like California, which is, California is still the most important state in cannabis because it's the largest. We all know that that California is, what is it, the 7th largest economy in the world if by itself. And in the cannabis industry, it's very similar. It's probably 10% of at least the cannabis market that's measured out there. So prices seem to be stabilizing in California. Legislation in terms of taxation has eased. I think regulators in California are aware that they've created dynamics for that industry that have made it almost impossible for a lot of the folks and the smaller players to survive. So we're seeing stabilization in California. We've seen a real turnaround in Michigan, which was one of those early exciting markets that became overly saturated, big pricing levels. I think you're seeing, what you would see in any industry, a rationalization of supply and pricing by the major players because they have to. So that's what I would characterize as what's going on state by state, and kind of the recap of what we've seen over the last few months, and themes that I think will carry into the fourth quarter.
So with the potential for some movement in reclassification, some of these changes at the state level, I would imagine investor attention to this space is going to start to draw. And when you look at CNBS, what does an investor get with an allocation to that fund as it relates to access to the cannabis space?
Sure. Yeah. I mean, we by definition, more than 80% of the portfolio has to be invested in companies that have more than 50% of their revenue stream coming from cannabis. So we're truly a cannabis fund, and we're trying to be invested across both the full spectrum of the subsectors that cannabis operates in. You can be a cannabis generalist, which means that obviously there's a retail component, there's a financial component, there's certainly, it's less, I should say, sophisticated in terms of the subsector breakdown. It's not GIC sectors, but the point is we're trying to find the companies that give investors exposure to the sector that we have today, and also those companies, though, and are many often the same companies that we think are well positioned for tomorrow as we see the industry changing, as we see e-commerce begin to evolve, as we see the potential for maybe interstate dynamics, which, by the way, I'm not sure we do right now. And just to be clear, I'm investing in the portfolio as the portfolio manager. I'm not investing in the companies that I want to believe are going to be better off when the macro changes. We're investing on the companies. I'm not, as they say, you don't ever invest with the government as your partner. I'm not necessarily investing in companies that I think are going to be the next headline or benefit the most from the next headline. I need to be invested in the companies that are the most successful now, based upon the world that we live in now. And then there's obviously a view on those that are best positioned for what's going to change tomorrow. So our goal is to be an active thematic allocation to cannabis. And advisors and self-directed investors, I think, have a pretty good idea of where cannabis should be in their total portfolio. This should not be 5% of your portfolio. This should be some small allocation. Clearly, there's a lot of volatility. There's clearly a lot of optionality in it. And what we saw with those headlines out of the third quarter should give investors the kind of sense of, it's a reminder of where there really is a lot of upside optionality in the sector. And please understand where there are also risks to investing in that. Cannabis companies and the sector as a whole, on those headlines, that series of headlines about rescheduling, and also some news on the banking side in late August to mid-September, moved the sector anywhere from 40 to 150%, depending on the name you're looking at, in just that amount of time, from very oversold levels or very low levels. Whether it's oversold or not, I'll let someone else assess that. Since then, we've given a lot of that back. I mean, that's kind of the nature of the industry that has been in. And frankly, where the lack of real institutional capital in the sector is part of the reason why I think the industry really is somewhat held captive. And what we always say is the good news here as an investor in CNBS is that you are investing in the cannabis sector well before this wall of capital comes in. And I believe that's very true. But those headlines created a major change in prices. The good news for investors is it's a reminder how profitable these companies could be. But the reality is that we've had a pretty significant pullback without any real change in those headlines. We're still waiting for an outcome. So you certainly haven't missed anything. And as a guy that's been investing in emerging markets and early stage asset classes, those that are less liquid, missing the first 20% here is not going to be what defines your investment.
So Tim, when you look back on the third quarter, what portfolio changes did you make that investors should be aware of?
I would say we cut a couple positions in a financial, call them folks that were lending into the sector, places where we felt we just didn't feel we had the kind of either insight into the underlying portfolio of those lenders, or where we just felt like we wanted to be streamlined into maybe higher growth opportunities. Remember, investing in some of the debt players that are secured lenders into the sector at one point was a very defensive place to be when the market was re-rating lower and lower. And so part of this was a view that we'd rather be more exposed in the top of the balance sheet on the names that we think are more exposed to the growth. So I would say we made adjustments. We actually allocated some cash. We were very cash heavy. And to the extent that we spent, half or 3/4 of that cash because of the opportunity set and because of where I think the industry is positioning, those would be the biggest changes in the portfolio.
All right. And finally, we're recording this in October of 2023. When you look at the rest of the fourth quarter and into next year, what do you see potentially unfolding in the cannabis space?
I think we're going to get clarity on whether there really is some near-term follow through on rescheduling, and because the political cycle we're in the middle of indicates that the current administration, the Biden administration, has a year left on the clock. That means that there's also a political cycle for them to get certain agenda items through that they believe are also, let's be clear, very important politically. I think this rescheduling conversation is both one that's politically tactical. I think it makes a lot of sense. I think it's something that's very consistent with how the world really has approached cannabis. So the rescheduling momentum, which I think does have a straight pass through to income statements and free cash flow, is something that we expect to have more detail on the fourth quarter. I don't think we're taking a step back. We can't take a step back. I think we will take steps forward. The timeline is still uncertain. I think the legislative backdrop for getting some kind of a banking package through is a much greater challenge, and one where I think the reality is the fact that something on banking has already gotten through the Senate Banking Committee in the third quarter is a huge victory. Let's follow those headlines. Other things that are happening, companies like TerraSend and Curaleaf and even Verano, which all these names are in the portfolio and all pretty core positions. These companies have actually listed on Western exchanges. The listing on the Toronto Stock Exchange, which I would consider one of the top exchanges in the world, is something that gives these companies at least access to more institutional capital. And they are able to do that because the Toronto Stock Exchange made a decision and said, we're comfortable with this risk. So big exchanges, exchange listings, more companies moving to these exchanges. I think that's good for the sector. I think the reality is that pricing overall and some of just the core blocking and tackling that make these companies profitable continues to improve. They've never been more rational in terms of allocating capital. They have to be. So we look at, valuations in the sector, certainly on a relative basis to itself, they're pretty attractive. And I think they're going to get more attractive in the fourth quarter. That's what we're excited about. Again, we're not investing on a wish list of what we want to happen. We're investing on the basis of what we have here.
Excellent. Tim, I appreciate you taking the time to do this update. To learn more about CNBS, visit cnbsetf.com.